Welcome, traders, to another Tickmill trading update with me, Patrick Munnelly, to take a look as we start the new week for some potential action areas and price objectives in the main US indices. In terms of the macro drivers for the week ahead, obviously, inflation prints, PPI, CPI on Wednesday. We also have Fed Chair Powell speaking tomorrow as well ahead of that CPI print. So expecting some decent volatility this week, and let's take a look now at the charts and see where we might have some trading opportunities. So coming into the week, I'm using the 52.60 to 52.70 as my bull bear zone for the emini S&P 500. You can adjust these levels for the US 500 by simply calculating the spread. And what I'm looking at is the potential for a pullback in the early part of the week into test the 52.10 to 52.20 area, 52.17 being the high volume node on this 4-hour profile. Watching there for potential bullish reversal patterns to engage on the long side, looking for a break through the bull bear zone and targeting a retest of prior cycle highs into 53.30. Alternative scenario will be a close through the 52.70 again. That would be a bullish confirmation, and I'd be on the long side from there. Same upside objective, looking at initially for a retest of the prior cycle highs at 53.30. Now, if either the Powell speech or CPI creates some near-term volatility, I would be looking at the last major corrective leg and overlaying that versus our current price level. And that would actually see us test back into this 51.50, 51.40 area. And from there, again, I would watch for bullish reversal patterns to engage on the long side, looking for a move back up into the high volume area, 52.10, 52.20, and then for a retest of the bull bear zone and potential upside break. At this stage, it's really going to take a close through this ascending trend channel support and weekly projected range support back down at 5100 to suggest there's a more meaningful high in place. And then we would be looking at downside corrective targets versus this swing structure. But for now, the setup and structure looks constructive. Moving to the Nasdaq, similar setup really, and the Nasdaq looking at a bull bear zone here at the 18,350 to 18,400 area, looking for corrections. Initial corrective move to pull back and test into the 18,200 area. From there, watching for bullish reversal patterns for an upside break. And then we're targeting a move up into the 19,000 handle as the next principal upside objective for the Nasdaq. Now, similar scenario, if we see some volatility around the CPI, given current price levels, we could expect to move back into 17,700 as a key area, and I'd be watching for bullish reversal patterns there to engage on the long side. Or if we extend lower, again, using this trend channel support and the value area low, 17,620, really we'd have to see a close through there to suggest a more meaningful corrective highs in place, and we would then be targeting leg to the downside. Moving to the Dow Jones, and we are similar scenario and setup really, looking for a correction back into test 39,450 to 39,330 area. Watch for bullish reversal patterns there to engage on the long side, initially targeting a test back into prior cycle highs, 40,360, en route then to a test of 40,500. If we do see any volatility events occur around the CPI, then I'd be looking for a pullback into the 38,730 high volume area and quality objective versus that last corrective leg. Bullish reversal patterns there once again to engage on the long side. And at this stage, in a similar vein to the other pairs, the other instruments we've been looking at here, the indexes, I would be looking at, we'd really need to see a close through the trend channel support here back through 38,330 area to suggest a more meaningful corrective highs in place, and then we would be looking at downside objectives. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.